Hey everyone, just doing a sound check. Let me know that you're hearing all right. I guess it's one of those days, so let me know. I'm trying to adjust the sound here, see if I can get it a little better. I can see it's coming in as loud as normal. I'm not sure why. Working on it. Yeah, thanks, Frederick. We got about 100 folks on, so we're getting the room starting to fill up a little bit. So just let me know if this is sounding any better. Wow. Okay. Very strange. I don't want to take this meeting down and start it over again. I've just been having a lot of technology issues this morning. I'm not sure what's going on. Um, sounds like I'm in a tunnel. Awesome. Let's see if this gets any better now. This should be a little better, I'm hoping. Sorry about this technology issues, man. This is frustrating as hell. Okay, cool. Cool. Awesome. Okay, folks, just give me another minute. We'll get this going. Got a lot to talk about today. Markets are trying to turn a little bit south after rebounding, but we're going to go through a lot of details. There's so much to do last night in the video, I couldn't even cover any of it. So we're going to get it done. So hang with me, and I will be back in a minute. I'm going to put up a screen for you to watch the futures trade while I'm finishing getting ready. Okay, got all kinds of issues going, but I'll work through them as we go through the show here. Had a lot of technology issues this morning. Rebooted it, had to take the internet down, all kinds of fun things are going on here. Anyway, let's start to dig into a number of things, trying to recap what I was talking about in the video last night, because I think it's going to be interesting as we start to go forward here in the next several days. The fact that we printed an all-time new high yesterday really doesn't actually do a lot from the standpoint of momentum and those type of things. I'm going to go just full screen so you can see the chart that I'm talking about here. This is the S&P futures, and you see the PPMs just are not getting a lot of what old floor term we used to talk a lot about is getting a lot of VIG, and the VIG is the momentum, and we're just seeing this thing really stall here, and this is why I talked about the market stalling. And this entire pattern that we're seeing up at this formation is very, it's not the accelerating formation like we saw back in August. You can see my cursor over here. This is where we're really looking for that kind of sharp acceleration. And if you look at the PPMs, and I'm going to draw in a few things just so you guys can see this stuff where I'm talking about. Is right here. This is the August rally that we had here. We're getting this much flatter look. The way the market grid is formed, everything's telling us that this thing is not going, it doesn't necessarily look like it's going to roll over, but it does suggest that we're not seeing a lot of very robust momentum where the market's just going to surge and blow up out of this pattern. These type of patterns, though, can continue I call them the creepy crawlers. They just kind of look like almost like a worm formation as the grid just kind of stair steps up on the way as we move forward. But the patterns that we're seeing here from the standpoint of the PPMs are also concerning. And we're just not getting, the short term just isn't coming alive like I thought it would if we printed above this high over here where we printed the first vaccine news that we had. I guess the Pfizer news, when we had that come out, that was somewhat somewhat of a surprise, and especially the timing of it and all of those type of things, as it was exactly a week after the crisis. So I thought there was something kind of interesting, and I just want to discuss it because there was something that happened. And if you go back to my 10:30 video that I did where everything looked like it was going to roll over, I've caught a lot of heat for that video, but I still stand by what I saw that night. And I was looking through some things, and the next sequence of events after that, this is all the way down here at these lows right here, when everything was rolling over, everything was accelerating, looked like a big decline was coming, and then the plunge protection team came. But I think there was something else that happened here. It's almost as if, just think about this, we had 5 gaps in a row. This is the futures, but the cash opened and we had 5 gaps in a row coming into a major election, and which had at the time had narrowed down. I realized that potentially it was like the people that buying was relentless and fearless. And I've been doing this a long time. And when you see that type of buying, you like, who's got that much confidence? Every day, just gapping higher, boom, boom, right into election morning, boom. Next day, boom, boom. Controversy, keep going, boom, boom, right? They just kept pushing this thing really, really hard. And it was almost as if somebody knew, whatever, somebody knew what was going to go on, and they were just pushing this market way, way, way higher. And it was interesting because we actually had a short signal come out on that Friday, and it let go on Thursday. So it rode 4 of the 5 gaps and then got out of that signal on a short-term basis. And then we know the rest from there as we moved up all the way into that spike on Monday where the Pfizer news came out. And I saw a comment on the channel this morning I think was actually pretty brilliant. Somebody said, next Monday we won't have a new vaccine announced, but we're going to have the, FDA is going to announce that they're approved to use the vaccine. And, I know I see a couple folks there that I know on the stream right now that are in the UK. And I mean, I don't know what the validity is, but I saw there's protesters out in the street talking about they're not going to take the vaccine that these guys are trying to shove on everybody. And, one of the fastest developments. And yeah, I don't know, folks, it's kind of crazy, but the markets. And so the reason why I'm talking about this is it's not about that. It's about what all this means relative to market action and those type of things. So we're going to continue to watch how cash flow happens around this news. This, we've seen this, maybe over the last 4 months. We've seen this around stimulus. We've seen this around COVID cases increasing, vaccines being announced, just going back to all this stuff. There's a lot of us here. We've been hanging around for a while, so we've been talking about this and interacting together. And it's interesting to see how this thing's set up. And I want to move this over to the SPX here. Is one of the things that I talked about last night. I wish there was a better way for me to zoom in. I'm actually looking at a couple tools out there that are going to be helpful to be able to zoom in and do a better job here on these live streams so that I can actually really zoom in on these charts. But we did over here get that RXT sell yesterday, and that suggests a 1 to 3 day move, and it typically will go toward the, let me just bring this up. It'll typically go toward the S2, S3 level, and it will hover down in the support ranges here. And if we look at what that number was for today, S2 was 36.47, low 36.44. So that STX sell, and if you did have the market grid that we offer to the public, you would have known yesterday if you're aggressive and you put out, at the close yesterday, put those sells out there, then this morning early when we came in weaker, that was pretty much the point in time when you wanted to cover that from a very short-term trade. But I think there's going to be at least 2 more days. The PPMs are rolling over. The only thing that's happened here is PPM 3 is managed to get above its second derivative. So that's somewhat of a positive. And I don't think there's some big rollover collapse going to happen here. What I believe is going to happen is just the way this grid is set up, it's just going to be one of these where it's going to roll and stair step up in a very low momentum type fashion. And as I mentioned a few minutes ago, these type of scenarios can go forever. And I see Borg's like, I thought I saw some of this stuff. He's saying that 30-40% of people won't take the vaccine. And that, and you're smart to do it. I would love to have a friend of mine on that knows this business really well, especially the bio. He was telling me you don't want to take the Pfizer vaccine anyway. So it alters some of the, there's some DNA and some other operators that are inside of that vaccine that are changing things. So yeah, it's a scary time we're in, from, I don't know which is worse, the vaccine or the fix, right? That's the way we always look at stuff. But yeah, so Yeah. So anyway, yeah, I'm gonna go through a lot of details. I'm just looking at some of the chat that's going on here. Yeah, we're gonna go through the database. 70% bullish Gino is not. It's not the percent bullish number. It's the duration you have to watch, and I've been covering that in the nightly videos. So I'll go through a lot of this stuff here in a minute. But I just want to cover this overall pattern that we're seeing here. This should drift, like I said, sideways to down. We should print down toward the lower end of the market grid. When it updates tonight, we should see the grid actually start to maybe turn down a little bit depending on how we close. We got a ton of news coming out. Tomorrow we got the claims. We also have the continuing claims, which is a number I believe that will definitely come in tomorrow below 6 million, and whether it's 5.5 or whatever. But this is leaning towards how the numbers, and we saw the ADP numbers come in, I think 302 versus a 380 expectation. And that, you folks have been on this channel for a while. I know I was talking about seeing this slowdown in October and November. Well, here we are in December. Those numbers are finally starting to show up. And I saw some typical comments on the channel where people, economy slowing down. Most people would believe, and it's true, the economy is compromised substantially. But there are segments of this economy that are just screaming like they never have before. It depends on where you are. The old saying, if your neighbor's out of work, it's a recession. If you're out of work, it's depression. So, it depends on your perspective and how you're being impacted as well. And I know this feels different for everybody, so it's, yeah. So there's a lot of mixed emotions around there. I saw somebody on the chat, there's going to be 5 million mortgages default in January. That's probably true. Yeah. There's 300 million people in the U.S. So that's a big number. Is it going to have impact? Probably not, only because everybody knows it's coming. It's the ones that surprise us that always have the most impact. But this RXT sell thing, we did get one a couple days ago. We got one on 11/24. We got right here. We got 2 days sideways. We printed down below on Monday. We printed down below that STX number, and that was the trigger. And then we get the reversal, and then we go from going down below STX to going above RTX, which is the extremes of the grid that you see here on the screen. So but that sounds big, but the volatility levels have contracted and they're very low right now. So this is going to be, I think, like I said, it's going to be an interesting place and time for this thing to go. I want to back up for a second here. Go back to daily before I go to the weekly. The high today is 36.66. R1 was 36.69. And last night's video I was talking about an R1 S2 number. That's exactly what we hit. We hit I thought we'd possibly see maybe, we were down overnight. This is exactly how it should have printed. S2 got printed first. And now my guess is that we'll settle between S1, S2. We're going to hang out here until the close. So we'll be able to work and look at that together. Let's go over to the weekly, and then I want to dig into the spreads, the Russell. I want to go through interest rates. We'll end up touching on gold, and we'll bring up Bitcoin as well, because there was some things. Some of you were wondering what happened to the typical Tuesday YouTube meeting we did. The software training we did just on a Zoom only meeting, and that's probably going to happen as we go forward, and we're going to repost some of that stuff. So we're trying to grab some pieces out of that and be more in a controlled environment, and so we'll continue to do that. But SPX weekly is interesting because it has that same pattern, and we've seen this pattern And every one of the, when you see this big blow up pattern where you see this big acceleration from the market grid, and I've talked about this a lot, the difference between the market grid indicator, and it's, you'll see it here, it's up as a rangefinder. What it's doing is it's adjusting to actual market volatility, and it's a 3 and 5. It's a combination of a 3 and 5 day calculation that it does. And then it puts out some Fibonacci relationships for the next bar. That's what we look at every day. It's a big part of my analysis on a day-to-day basis, as you know, as you watch the channel. That has always been part of me. That goes back to 1997 when I first started using that calculation. And anyway, it's really good, because a lot of stuff that I've done in my past, I have to find locations where to put trades on, and this is what that indicator does. But we look at the weekly, we start to see when volatility blows up, it does something similar to what Bollinger Bands does, but the difference, Bollinger Bands are standard deviations. This is pure volatility, range volatility. So it's a different type of calculation. And you get the, what I call the bubble, or when volatility kicks up. In this case, we get a lot of times you'll hear me talk about the dragon head. So we're kind of setting up a dragon head here, which is more of a sideways consolidation. We're likely to see volatility contract a little bit more. And, you know, as much uncertainty that seems to be out there, you know, it's there's still a lot of stuff going on with the elections. There's probably going to be a Supreme Court case. There's still stuff out there. Not going to make any predictions or don't have any feelings about it either way. It's just, it's something we have to deal with as investors, and it keeps markets locked into these ranges. And so that's what everything's telling us, that there's a cap on this market right now. And the market grid, this is a weekly market grid on SPX. This will actually help us to guide at least what the expectations are. And we look at the numbers here. R2 is 36.90, the high 78. R1 was 36.62. And I know on Monday's video I talked about we might be able to print up into R1, R2. That's what we've done so far. Is this week done? I don't know. We still have, today is just going to be a grind day. It looks like it's the day before we start to get more news that is going to be material from the standpoint of the employment situation. And then we've got all kinds of year-end forces and things of that coming out as well. So there, you know, just as I'm going through here, and you know, we've got a fair amount of people online right now. I just want to remind everyone that I will be telling you my schedule probably next week for the last 2 weeks of the year, and how the channel is going to work and what kind of activity there's going to be. I'm actually going to be out of town for the last couple of weeks of the year, so that the better part of them anyway. And so what I want to do then is I'm going to keep a video going, something going to keep the channel with some kind of perspective, but it won't be daily as we're used to seeing. But anyway, let's go to the Russell here, because I think that's something that I started looking at last night. Let me go to the daily Russell. And the Russell is actually, it's almost like it's about 2 steps ahead of what's going on in the other indices. We got the RXT sell on 11/24, and then we had the 2-3 day sideways. We did print down to the STX number, which is typical. But what we're doing now is we're hovering and trading along the 10-day moving average. And this is going to be your primary demand line. When I talk about a demand line, what I'm really talking about here is where you're going to have support and there's going to be buyers there, okay? And you can see this line. I don't like trend lines. I like moving averages because I hate trend lines because they're too subjective. Anything that I do and draw around the markets it's got too much of my influence in it. So I just want to read moving averages. That's why I developed the PPMs, which measure the angle of attack of the moving averages, and then that's my analysis. That's my life. That's what I've done. But this is that demand line. Right now, PPM1 is at a 0.21, which gives us about a 60% probability to remain above that line. Today, the low 1702, and that's 181702. The average is 181969, and we're trading just above that. We bounced back above that number at 1830. So that was right about where that number came in. And if we look at the grid itself, you'll see S3 was 1816. So that was in the context of normal volatility, normal range volatility day to day. And this is part of the premise of my entire work that I talk to you folks about is understanding what's likely to happen. The probabilities are likely to happen from a range standpoint, daily, weekly, monthly. That's why on the market grid, I call it the matrix, where you have daily, weekly, monthly, and you get a context of everything. And I'm going to go through this, and on tonight's video, I'll make sure I have the monthly projection numbers. I'm going to go through that here in just a few minutes, but I want to cover the Russell. I want to talk about the spreads. I want to talk about the rotation that we're seeing in the markets and what that means. It's interesting that I've been talking about this rotation since maybe July. Some probably started talking about it because the spreads were starting to change back in June, but that has been a gradual process, and it's likely to continue. However, and we're going to go through these spread charts here in a minute. There is something that looks like maybe we're going to go back into where the NASDAQ will have a little more leadership, both up and down, but we're definitely starting to see this chart illustrates here that we're seeing the Russell starting to leg here, and it's got it's got what I call a small dragon head on it. So we're getting that contraction. 10-day moving average is key here. We got PPM1 at 0.21. That just tells you that you're going to be able to hold that number. There's a 6 out of 10 chance you're going to hold that number. And then ultimately, what you want to, if it breaks through that number, the next major support number will be the 21-day moving average, 1759. And the way you look at this from a market grid viewpoint, if we go back to 1778 is STX on a weekly, so that would put us all the way back to STX weekly. And you can also see that we're getting an inside bar on the weekly on the Russell, and this is just kind of confirming what I'm talking to you about as far as Russell seeing a contraction. It's going into the sideways, slightly down mode that we're seeing right now, and this is really key to being able to understand what's going to happen. So it looks to me at the moment, subject to change, markets are dynamic, is that we're going to go into this sideways range here and just start to consolidate, this high level consolidation. So you get this, we got the 5 bars up. Now we're going to get maybe 2 to 3 weeks sideways, maybe a slight bias to the downside. And then right as we come into the first of the year, we could see, a rally, something like that, to actually move the markets quite a bit higher and do the next leg up. And we'll see how that all sets up. And I'll be talking about that as we come into year end and looking into that first full week. Just to give you a heads up, I know you guys I think I think it's the week of the 4th or so before we'll start back on full, everyday videos again. But anyway, yeah, so the momentum here on a weekly is good, even though it's flattened out. We've got pretty robust trends going on at intermediate level. So this tells us exactly what I'm setting up here for you, is that this is going to be a sideways range. So let's take a look at some of these spreads. Here's the Russell versus the NASDAQ. It's trading at least up at the upper range of the tops that we've been seeing, and it's starting to flatten out. But like I said, I believe the Russell's likely to stay sideways. I'll cover the NASDAQ here in a minute, but the NASDAQ on a short-term basis has a little better upward momentum than what we've seen on some of the others. So basically, the Russell versus the NASDAQ trade is still on. It's still good. And, if you can, probably the most effective way is to put that on in the futures. You don't even have to go. You can actually just put one on against the other. For instance, you could do long Russell, long NASDAQ. You have to get the ratios right for the dollar amounts, or otherwise that spread won't work. So I think it's 2-to-1 on the Russell, 2 Russells, 1 NAS, I think. I stand corrected. I need to get that number down. But you put those on, and what will happen is you lose money on your long NASDAQ and you make money on your long Russell. But it's kind of interesting. If you can get the short NAS out there, it's going to be a much better trade. And so if you can go long Russell, short the NASDAQ, and I put that out there, and that spread works really well. So, take a look at some of the options, and, you can, you can definitely reach out to us, and I'll continue to, make posts on the channel if you have questions about it, because I do look at a lot of the comments there, and we spend half of our time deleting bots. Okay, so that kind of covers that. I'm going to do like I usually do. We got a little late start, so I'll go for a while more. I want to cover the interest rates. We need to touch on the dollar, and then kind of keep this thing going. Yeah, the market just bounced back a little bit. It was down about 7 handles. Now we're down 175. So there's still some bounce in this market as we're looking around here. So let's go ahead and let's go to the interest rates. Let me get on so you can see the full screen here. So here we are at the weekly 10-year. We're printing 956. If you recall, several weeks ago, I was talking about us moving back to 1% on the 10-year, and also ultimately the extreme is going to be around 1.2, and I'll show you where that number comes from here. Yeah, so we can talk a little bit. I've been making a joke of the fairy godmother, Janet Yellen. I have to tell you, she was by far the most annoying Fed chairman ever to exist. And the reason why she was annoying is she never said anything. She was, yeah, very bad. I've been in the markets literally since Volcker came in, 1979. So I watched Volcker, Greenspan, Helicopter Ben, then Yellen, and now this joker we got now, Jay Powell. And Yellen's very wealthy, by the way. She's an elitist. So is Powell. Powell is he's got a fair amount of money. These people are not working for government salaries. Okay, It's somewhat interesting the way that our governments are structured. They seem to be serving a different group than maybe the people. It's hard to say, huh? But anyway, yeah, she she really, I hate that. It's not about her personally. It's her demeanor and how she presents, and so to have her as Treasury Secretary, like I said, just know they'll buy stocks now. I had a good buddy of mine that I haven't talked to for a little while sent me a text, and I reached out to him yesterday morning, and he was like, "Oh man, this market's gonna go down to zero." I go, "No, the S&P is probably going to 10,000. You guys are gonna give me a bunch of shit for saying that." But reason why, they're just if the whole globalist routine is back on, then everything that was trying to be done during the Obama administration is coming back on. I mean, if you look at what Biden's cabinet and all the proposals, it's Obama 2.0. Obama's running the country maybe again in the shadow government. And so what's happening is all of these people that are coming in are actually doing that. So I don't know if something came out or not, because we just seen a pretty good rebound. We saw about a 10-handle move here on the and so that was kind of an interesting bounce there. Looked like we were going to roll over, but these interest rates are going higher. I've been telling you folks this for a while. We're going to continue to see this. It's not what's happening. This is actually what ultimately makes things a little bullish on a longer term basis, because the financial stocks are going to be affected by this. And I'm going to flop over from this 10-year weekly over to the yield curve, and the yield curve flattened out a little bit, but you can see it's starting to spike back up again. This on the far right hand side. This is that spread starting to move up, and this all started back on March 9th when the Fed announced all of the programs. And it was interesting because there was a big deal made out of Steve Mnuchin saying that he was going to, cancel out all these programs, and it was somehow going to cause something with the Fed. Well, of the money that the Fed had allocated for these programs for buying bonds, they only used like 110 billion of the 400 billion that was allotted. So they didn't even use the money. And this is so happens, folks. I've been watching the Fed for a long time. Most of what they are going to do and what you're going to hear 80% of the time is jawboning, where they're posturing, telling the markets that, hey, we're going to do this, and they will do it if they have to. So don't get me wrong. But what happens is the free markets and market participants go, it's okay to put that bid in. It's okay to buy that, whatever it is. And that's why it works. And they do have to do some on some days, and they'll make sure their presence is felt, especially if you're working in secondary or primary market dealers. They see the activity. There's some transparency there. And so when they see that, they know, oh yeah, they're there just like they said. It's okay to keep doing whatever we normally do. And it does stabilize the markets. It absolutely had. That was a big move they made back on March 9th. But if you look at this chart here, and we look at this is March 9th, it just spiked, and this is where the yield curve steepened all the way into June, around that June 9th area, which is where the market peaked out originally. The stock market peaked out. Well, also the spread peaked out, and you can see we still have not printed this. The steepness of this spread hasn't went further. This is a daily chart, so let me show you. Let's break this yield curve out a little bit so you can see a little more. Now, this is what it looks like as we go back into, if you see where my cursor, the bottom of this chart, let me get off screen so you can see this full thing. The bottom of this chart was July of 18. And they've been basically manipulating the yield curve for a while, and they want this thing to steepen, especially, this is the 1030. I could show you the 530, the same kind of event happening there. And this will continue. Now, when we go out to the next level, should be able to go out. Yeah, so now this brings in even a bigger perspective. Over on the left here, where I have my cursor down at the bottom, that is 2006. So we saw this big steepener all the way into 2011. So during '06, and if you look at the '09, this is 10/31/08. So this was right before Lehman. And when that happened, we saw this big move up and a big steepening in the yield curve all the way into 2011. Now, I've been doing this so long, we have a lot of institutional money. This became 2011, this whole period here became the time of European financial crisis. Everything started to happen. This is where Europe really came in as a player in a negative way, and this affected the yield curve, so they flattened the yield curve out again as we came into all the craziness. 2015, it continued to flatten, and anybody that was trading any kind of stocks or managing any money from 2014 and 15, by far the two hardest years to make money in the stock market that there's been. I think it was very, very narrow. It was basically, it really was maybe 5 or 6 stocks, 10 stocks driving the markets at that time. And the more you diversified as a money manager back in those days, the worse you did. And then we saw as we came in, into 18, this is that low in 18. They continued to flatten that curve, and all the rates got as close to zero as they were going to get, and with a slightly upslope yield curve. And you remember all the talk about the inverted yield curve, and there was a recession and all that stuff coming. Well, now we're in the opposite mode here. Let me just move this out of the way. Now we're starting to recover, and we're in this steepening mode. So I would suggest, looking at this, that we're probably more in a cycle like this '06 to '11 cycle. These cycles, and when you start to look at interest rates, last for a very long time. You can see from 2011 down to 18, 7 years. They're 5 and 7 years. A lot of currency trends are very similar in how these things happen. These are big. This is where the money is at. This thing is, 50 times bigger than the stock market. I don't even know what the number is anymore. I used to know the number, but it's multiple times the size and the amount of money that is flowing around inside of the market, especially with all the increase in debt. It's so much bigger. So this is one of the key areas to really spend some time and to talk about these yield curves and what's going on. So this manipulation by the Fed is being targeted, and they will buy or sell securities to make this happen. So right now, they're selling the long end of the curve, and the short end they're going to keep low. And they've actually told us that that's what they're going to do. Yeah, and the Forex market is massive as well, because it's currency is the largest commodity market on the planet. Everything's priced in currency. So absolutely. Yeah, but the point is this is where the institutional money goes. This is where banks, and I've been saying this lately, as I worked with banks for about 12 years in hedging and working with large proprietary trading rooms and consulting, and banks don't take risk, period. They trade these spreads like you have no idea. A long duration and a spread in a bank, when they think they're long, the longest piece of paper they're going to own is somewhere between 3 and 5 years. And I've seen a couple institutions go out to 7.5. But these guys don't take risks. They make their money on spreads, and they make their money on fees. Banks take no risk. They're not risk takers. And so that's why these things are important, and this is why the Fed focuses so much time on actually looking at this stuff, because ultimately this is what makes the rest of everything else work. And this specifically, as we talk about this, they're still rallying this market. It looks like we're up 308 now on the futures. But what this effects of this is especially in recovery, and they're pushing the markets. You can see during from this '09 period to 11, that was a very strong period in the equity markets. You can see going back. If you even look at the lows of 18, we can look at that, but I'm pretty deep into this hole. I'm trying to find a way to climb out of it. But the spread is going to continue to move higher. Interest rates will move higher. The 30-year, 10-year will move higher. The 5, 2s, and anything associated around short-term T-bills and Fed funds rates are going to stay very tight. They're going to keep that at 0.25. Meanwhile, all this other stuff, they want to float higher, and this is healthy for the financials sector. This is healthy for what you're seeing is the selling of these treasuries, is that money has to go somewhere. And I've been telling folks for a long time that what you are going to get a lot of times is your job, my job, whose ever job is to be able to figure out where the cash flow is going. So if they're selling bonds and you're seeing bonds yields go up like they are, so they're selling bonds, where's that money going? And so that money's going to always seek out some other asset class. It just very seldom does go in cash. It's almost like a Ouija board. They're moving it from one side to another, And so right now, I think it's going to go into this rotation trade. So I know this was a long thing I got into here, but this is something I never get a chance to go in depth on this stuff and talk about what's really going on in the financials and especially in the interest rates, because I had early on a professor I had made it clear. It was a real estate class that I was taking, and he made it clear. He goes, if you don't understand interest rates, you'll never do well in business, ever. So interest rates were everything that got me to be a bond trader. That just really influenced me, because I won't tell you any stories about how that happened, but there was an event that happened in 1979. If that event hadn't happened, I'd probably be a real estate guy today. I wouldn't be doing markets like what I did. But basically, the real estate market blew up in '79 when interest rates ended up in 1980. Interest rates went to 16%, and even the short term, if you imagine Fed funds, they had a fee on it, was 20%. Talk about credit card debt. The government was running on credit card debt, and it was all about Paul Volcker. And that whole scenario that Volcker did, he was hell-bent to raise rates to kill inflation. And that was happening during a recession. You had a Fed chairman raising interest rates during a recession. Who the hell does that, right? Nobody. But he broke the inflation. Things were pretty crazy from 74 to 80. It was post-Nixon. Carter came in, high taxation, high inflation. Everything was out of control then. And so he was going to break it. And to Jimmy Carter's credit, he put Volcker in to do that. And so that was the beginning. Reagan came in, tax law changes, all that stuff. And maybe next week's going to be interesting. We may start the stream just a little bit later. I'll let you guys know. I've got some event earlier in the day that I have to participate in. So, but maybe that's what we should talk about, taxation, because we very likely are up against a major shift in taxation as well, and that's going to cause effect. That's going to have a big effect on everything. Taxes are everything. Taxes matter. Yeah, so we're up 6 handles on the S&P now. So let's real quick. Let me go off screen. Let's take a look at the level 2 here. Yeah, so we're making new highs on the session. We're I think we're getting close to the STX number. Hang on, let's get over here. Go to futures. So this is weekly. Yeah, so we're printing right now at 68, so we're just about R1 on the futures. Looking here. So the high so far 68.75, R1 71.75. So we're continuing to work up in the grid. Like I said before, the futures are trying to get back above this first and second derivative, but it's not really happening. So sorry about the going into depth on these interest rate thing, but it just something that needed to be discussed. And that should do it. Okay, I'm just looking at the chat line here for a second, just see why I was in that rant. Yeah, and I've told you guys, I'm just looking at a couple of comments here on the chat line, and you know, the Fed there's not going to be negative interest rates in the United States of America. It doesn't work. Just call up Europe and ask them. We've got some Europeans that can tell you about it. It's not a good thing. Yeah, we will definitely go through Bitcoin and talk about that as well. I want to go and look at the dollar here. So I would watch, if you guys are watching this closely, let's keep an eye on this R171 number on the futures. While this felt like a big rally, all we did was print a new high. The old highs were at 66 levels, so now we're printing 68.75. So there's really not a lot. There's still not that big. There's not a lot of momentum. On a short-term level, we did see a nice rally. It was probably 14, 15 handles, so I won't discount that. But definitely the machines are still involved here. I don't know if there's any kind of news flowing around. So if you guys, yeah, it's funny. Frugalholic, if you guys are on our Facebook channel, I posted a talk that Hugh Hendry came to one of my conference. He was my keynote speaker at one of my conferences in 2010, and he was talking about everybody becoming Japanese. And I've talked about this as well, going back to last summer, talking about it on the channel, where I thought we were going to get, where we were going to turn Japanese and we're going to recreate maybe Japan 1984 to 1989, where we saw this parabolic curve in the markets. I'm longer term. I'm still very bullish in the markets. I don't know. Yeah, there you go. Schumer and Pelosi agree to work on. That's hilarious, right? That's the kind of shit these markets will run on, because these guys aren't going to agree to anything. Yeah, unfortunately, that's what's going to go on. Yeah, that ought to go over really well. Like I said in last night's video, it's all about Georgia right now, for sure, regardless of who the president ends up to be. It's all about, yeah. We'll just have to see how it happens. Yeah, so let's take a look at the dollar real quick. I just wanted to glance over here. Here we are at 66. These are the old highs on the futures. I think we did trade down to about back towards the 55 number there for a minute. So we got a nice bounce there. Let's go and take a look at, let's go to the Dow. The Dow is, and this is, by the way, okay, before anyone starts to troll me in any way, this is not a political statement, but we are switching policies from America first to America last. And what I mean by that is we're going back to the old policies of opening up, free trade. You see it. That's Janet Yellen. That she will be the primary person as the Secretary of Treasury to work with the Chinese. And that whole policy is just flipped. Okay, so there's no better way to put it than the way it is. I mean, the tariffs will be really taken off, all that stuff. Short term, maybe good, maybe bad. We're just going to have to take an analysis of that. But for sure, Ray Dalio's wrong. There's not going to be a depression. Okay, there's no depression coming, and you know that what's going to happen is they're going to engineer this thing. They're going to spend any money and print money, and maybe this is the final printing demise of society as we know it. We'll have to see. I'm not going down that trail. My job is to kind of figure out what's going to happen here in the next week or 2 or 6 months if I'm lucky. So I don't go into a lot of the long-term prediction stuff, but we're basically seeing that shift in policy. And we're also, like I said, I'm not going to go into tax thing. I want to prepare for that. But next week, remind me on the the channel and other places before we come into next week that we need to talk taxes. I've seen a couple comments on there, so keep the chatter up so it keeps me focused a little bit. And because the next, let's see, what is that going to be? Now there's probably 2 more live streams before we go into holiday mode. Yeah, so Daryl Wong, this is TradeStation. PPMs are currently not available on TradeStation because I won't go too far than that. Then they've just been completely impossible to work with, and hopefully I'll get that done. Yeah, I love that. Of course he can't kick. He's got a broken foot. Yeah, exactly. Yellen is trying to break it with the pixie dust. But let's talk about the Dow here, because the Dow, I had been talking, you've been watching the channel, when we were back last over here in September, I thought this thing was setting up. I was talking about going to the 200-day moving average. I was talking about a lot of stuff, right? And everything looked like that was going to happen, even this little pullback as we came into October. But now you can almost set it right here. This was the 11th of November. Now you're seeing the Dow just punching out low after low after low. It is starting to show some signs that it's going to possibly catch a bid and some support. But the bottom line is this thing is in big trouble, and it's much different than what it was before. As we go over, take a look at the weekly. We're going to go weekly and then monthly. We'll be out of here. We're going to do gold, Bitcoin, and then I think it's going to be getting close to time where we'll start talking about individual stocks and doing some other things that are out there. But you can see here on a weekly basis, the STX number is 9087. 9109 is the S3. The low so far is 9110. So we printed S3 weekly, and this thing is also accelerating. We got PPM1 right now at a minus 0.37, which is trend mode. Anything under 0.25, minus 0.25 is a trend mode. So these PPMs, what they do is they measure the PPM stands for price pressure momentum. So it measures the moving averages, and it tells you what the probabilities are around moving averages, whether we're going to stay below or above those numbers depending on the direction of movement. A negative 0.37 is a downtrend. The 10-week moving average is way up at 92.72, but it's dropping. It's starting to accelerate. It's dropping at about 35 cents per week right now. So that number is that resistance number is going to come down. So when you're looking at any type of trend, the 10-week moving average is going to keep printing. It's going to keep dropping right now with this acceleration, especially on a weekly level. PPM2 is 0.27, negative 0.27, PPM3 0.18. So we've got all the moving averages rolling over, and that just tells you that we're not going to see probably anything over 92.50 on this market, and that would be a huge rally as it sits right now. So the Dow is going to continue to be weak, it looks like. And you know, the other argument is, and I went through both sides of this argument, I've lived through both, is where there was a time when the dollar was devaluating and the stock market went up with the devaluation of the dollar, because theoretically making some of the multinationals their goods cheaper and all that kind of stuff. So stocks went up while the dollar went down. I've seen stocks go up while the dollar's going up. And in this case, what we're probably going to see, this is a monthly that I put up here, we're going to see this thing continue potentially down maybe to the 200-month moving average is 86 handle. That's quite a ways from here. That's 25% more. That's probably a little drastic saying that out loud, but certainly the grid is going to be important. When we come into the first of the year, we start looking at January grid on the monthly dollar. That's going to tell us a lot of stuff about how this is going. But we look at the PPMs. Okay, we look at what's the trend. What's the secular trend right now? PPM1 minus 0.73, PPM2 minus 3.0, PPM3 is just basically flat. So those 10, 21, 40 month moving averages, the 10 and the 21-month moving averages are, accelerating and down substantially. Just telling you, we are months and months, probably 6 months, 8 months from any type of trigger that would suggest that the dollar's trend would even have a chance to reverse. And it's just a matter right now is how low is low. And we could start to really dig into this, and it's something I'll be watching as we go forward. But this is definitely a trend to be focused on. So I spent a lot of time talking about the interest rates, the yield curve. This is part of, and I mentioned this in last night's video, that all this stuff is connected. And we're going to go to gold next, and we'll start to, gold's probably going to be the good indicator on how all this is going to play out in the end. And so I'm going to do gold next. Like I said, gold, Bitcoin, and then I'll give you a call out, and we'll start to look at some of the individual stocks and start to go through the balance of the show coming into the close. We'll do that, covering all that stuff. So let's take a look at gold. We'll go bottom up on gold. We'll start at the daily. We're actually able to trade over the 10-day moving average. I talked about this in the commentary last night. We're still a negative 32, so this is, and we're at the 200-day moving average as well, 1831. Last trade, 1833, so we're back above that 200-day moving average. Right now, that number is 1831.30. Last trade 1833. We look at the market grid for today. We had an 1050 low, 1809 was S1. I talked about this last night. I thought we'd see R1, R2. 1838 is a high, 1835, so 1838 is R2. So we probably played out this gold for this, but we're seeing PPMs for the first time. The other day we printed down into those extreme numbers, and I'll show you those on the weekly chart here, as we printed down into that 1766, 1761 level. I mentioned there was a small probability that we could print as low as 1720. Well, that got reversed the other day, so here we are, $70 higher. So let's take a look at the weekly. And this is the other thing that I mentioned. I know on Monday night's video I talked about rebounding back toward the 1836 level, which is the 40-week moving average, that upward sloping moving average. And what's interesting is we look at the PPMs here on a weekly. PPM1 has crossed to its first derivative. PPM 2 and 3 have some work to do, but this is likely to be the cap in this market. 1833 is R2, which matches with the 200-day, with the 40-week. All of these numbers, I like to watch these clusters of numbers. So we're right at a resistance point. I don't think it's necessarily a short right here. There might be a small trade off of that, but the absolute on this thing is 1857, and I can't blow it up, but a 0.236 retracement from the high-low in this pattern is 1831. So we basically have done a minimum Fibonacci retracement. We're trading at the 40-day moving, 40-week moving average, the 200-day moving average, and all of these things are kind of clustered right there. And we're still negative on all the on PPM1, which tells us that the absolute cap on this thing would be a move possibly up into the grid. We look at the grid at 1857 would be an absolute extreme. I don't think that's going to happen, but we've got a lot of month ahead of us. It's the 2nd of December. So this is for the month of December. Okay, so that's gold. Let's do Bitcoin. Bitcoin has set up one of these volatility ranges that I talk about. The market grid here was reasonably useful. The low 18,475, S1 18,248, but we had a 10-day moving average here at 18,307, and so we traded just above that. I talked about this a little bit when we were doing a wave tech training at the inn yesterday. That probably the trade on Bitcoin is really better defined looking at the a little bit intermediate charts is going to be the better target here. And I mentioned that if you can see this thing, you can see the low for the week, 18,134. S1 is 17,929. S2, 17,249. If you get a look at 17,250, 16,570, that range is your buy zone. And what we're going to see, I believe, I'm going to pull this over and I'm going to draw this in on Bitcoin, is I think what you're going to see is the following. And you may recall I did video, I don't know, a couple weeks ago, Bitcoin 23,000. I'll show you where that number came from here as well. So this is my expectation here, is that this market grid is going to set up some kind of the old classic dragon head, where we get this thing set up here, and the market trading will stay within this grid and probably end up trading here between those numbers I just mentioned, down around 16,500, 16,700 range. And then when this pattern is done, we'll get this wedge set up here. Then you probably break out to the upside and you'll print some of these other numbers. I'm going to show you where the Fibonacci projections came on this. But this is most likely what we're going to set up. So there's going to be a trading range. Could print all the way up to the highs here. Let me just take these off here so you can see this. So the high end of the range right now, the range is 21,110. This is the projected range off the grid, as low as 15,963. As I said, S2, S3, if you get a chance to see that, you can buy there. On the upside are somewhere between R2, R3 is your sell zone. You're going to stay within that zone. Now this week we did print a new high here, where we got to 19,915. I'm going to bring up the Fibonacci calcs here so you can see that. And this is where I came up with there was a couple numbers, and I remember when I covered this several weeks ago, there's some numbers. You'll see it in this grid over on the side. The high target was 18,423, 21,698, and 23,721. That's these dots that are up above the market. And I remember when we were looking at this a few weeks back, I said 18,423 will not be where the market ends. We will render a new high, all-time high, which we've done, and then most likely we'll end up trading at least 21.6, maybe 23.7, and the momentum that we're seeing here from a PPM standpoint is just absolutely huge, where we've got a 5.87. This is the weekly, and a 3.80 plus, and a 2.53. These are huge numbers, and what that suggests is that we're going to set up that formation I just showed you, where we get the volatility spike. Let me show you one of these over on the left-hand side of the screen here. This is what I'm talking about. This is where we got the last little volatility spike, is in this box here, and we traded in this range, like I talked about. Usually you'll get the volatility narrows. When it narrows, you get a breakthrough, and then you get a rally out of here. In this case, we had a lot of work to do, and we saw the opposite on this, where we had the expansion on the downside. So these formations, their volatility spikes are key, and we literally just are in the process of forming a new one right now up at this level. So this is going to set up this pattern, and it's similar. If I brought up Tesla, I remember talking about Tesla before it went on its next run. That's exactly where it was going as well. It was in one of these patterns. So I'll bring up. I know we'll cover Tesla here in a little bit, but this is what's likely to go on within Bitcoin. So you got a huge trading range. I was kind of mad the other morning. It printed down to the 16 number. The low was STX low 1682, and it got down to 16221. So it traded down to that S3 STX number. And of course, the problem with Bitcoin, it happens when you're sleeping or some odd time. So I woke up, it was already trading like 17.8 or something like that. That was a very quick bounce when it happened. So that's the other problem with trying to figure out where to put these on, or being around when they're happening. And I know a lot of people have expressed a lot of issues with, like, even with the stock market, trying, some of the best opportunities are in the futures overnight, and they have been for the better part of this year. And we see they're not always, trying to get some of the typical inverses, or, some of these others you don't have full 24-hour trading in, makes it difficult to get positioned sometimes, and you have to come in late on trades just because of that lag. So futures are definitely your best option for having that ability to put those on. Okay. I think we got to everything. Wow, right at 3 o'clock. We got an hour to go. It is, oh, you can't see it on this green screen. It's Runa time. So we'll take a break for some Runa. When I come back, don't give them to me yet, but we'll start to load up some symbols that you guys want to watch. Oh yeah, before we do that, let's do S&P monthly. Thanks for bringing that up. Appreciate it. This is also kind of interesting. So this is the SPX weekly, by the way, and SPX weekly has current price objectives, Fibonacci projections on the upside of 4,600, 5,100, and 5,400. Now, sometimes we'll get these kind of formations, but it came out of this, I'm just trying to say, it came out of this June-October pattern. And this is on a weekly basis. I don't put a lot of merit in them. But if you look at the PPMs on a weekly, they are screaming on the upside. So as far as having any kind of new lows or anything, we're still printing up. Right now we're almost at that 71 number. SPX, I think, was the number. Let me go to the daily, and then we'll go to monthly here. Yeah, so even on the Fibonacci projections on the daily here is suggesting 39, 38, 4,000 on the S&P. These type of patterns would take, maybe 6-8 weeks to get there, but in the world we live in, it may not take that long. But these are valid projections right now. So they're pointing to a lot of upside, and I just love it when I see all the negative comments on the channel. Very empowering. Okay, so let's go to monthly. It's interesting that the monthly Fibonacci targets, 36.38, which we're trading above right now, extreme 38.85 on there. So that's probably, of all the stuff I've just shown you, this is probably the most accurate. That, we could print up to 38.85. That's quite a ways from here. It's 200 points. So, that's 12-15%. So that's a fairly big number for sure. But you can see the PPMs are just soaring here. But if we look at this, at the market grid for this month, we're looking at R1 3705, R2 3798, 3891, We're getting kind of into that Fibonacci projection here. That projection, what I said was let me get it on screen here, 3885. So as we go into the grid, yeah. So our R3 on the grid would be a similar type number here. And the other thing that's probably happening, I know somebody I saw very early on, I don't know if you're still on, but somebody made a comment about this upward ABC. The really scary part, and I don't know if scary, that's a bad word. The interesting part, let me see if I can change this scale real quick here. Bear with me. There's a way that I can set this so I can do my own scaling here. 1 second here. So what we're going to do is we're going to put out, I'm just going to really, we're going to put a 7,600 high on this chart. All right, that gives me room to draw. So, okay, we're going to go a little bit into the woods on the S&P here. As I mentioned, if some of these numbers, 46, 5,500, I'm going to try to draw this pattern in. And I've been looking at this for a while, and I think I haven't validated it yet. We talked about this is probably, I've been struggling with this, ABC, this level since we made a new high. You could argue that maybe it's an ABC and then we're going to come back into pattern. I had discussed that potential a while back, but what it looks like now, and it's primarily because of this monster PPM moves that we've had on all three of these. You have PPM 1 at 103 at 103, which is very big. But what's likely to happen here is that we're going to see, let me erase this so I can draw on some clean lines. So what's likely to happen as far as we go into this is going to be this pattern here could end up to be, I'm going to say it out loud, okay? A 1, 2, so this would be 1, this would be 2, and then the next move up would be a 3, which would put us into some really crazy numbers if I did the math on this. I'm not going to do it today, but that's what this is suggesting from the standpoint of the pattern, okay? That plays into the weekly. Let me just see if I can go to weekly. Good. Okay, yeah. So this is fairly good here. So we've got these upward patterns here, 4605, 5100. And like I said, I won't do the math right now because it will take too long to do it live. But I would tell you that it is, there's a lot of potential on the upside, and it is going to Princes of the Yen, not Prince Us, but Princes of the Yen book, and looking at what happened in Japan. That is potentially what the U.S., what the world's going to go into, and you know, how many of you have heard the term the Great Reset? So that's exactly where we're at. The globalists of the planet, we got COVID. We got all kinds. They're going to if you look back at some of my early March, I think there's a video that I put out that said, I think it was titled Unintended Socialism or something like that. But what's happening here is it's interesting that this may sound controversial, but I'm just going to say this because it's interesting that people are talking about diversity and equality and all that stuff. And what I'm saying on this screen is anything but that. If you're not involved in these equity markets and not in the upper echelon of the economic spectrum, you're not going to participate in this. And the equity, inequity, and everything that you know today will be even worse. But what it looks like, this chart is right. Let's just make an assumption. And I talk to you folks that if you've been around for a while, I talk a lot about doing what I call reverse fundamentals. So if the charts are telling me that this is going to happen, from a technical viewpoint, that's what we have here. We're looking at 4,600, 5,400 target on S&P, right? Let's just assume that this Fibonacci projection is right. What would possibly cause that to happen? And the only thing that possibly could do that is where you have to just pump up the markets. Like I said, we got the fairy godmother with her wand and buying equities, and they're going to pump everything up, and they're going to make the planet better. I saw a interesting speech from out of the UN. Both I know Christoph's on here. Your prime minister was there talking about. Trudeau was talking about this is a great opportunity for us to reset. I saw another guy saying this is opportunity for us to fix everything that we got wrong going back to World War II, and the people that in the power are going to take us somewhere. And all of us little people don't have a lot to say about what's going on, but there is a huge shift, and I believe what we're seeing here is that shift. And we're living, obviously we're always living, history, but this is probably a historical event. If you could go out 50 years from right this moment, it might be fascinating what you see. Could be bad, could be good. I'm not making any predictions like that. But I'm telling you, this chart for sure says that Ray Dalio is wrong. There's not a depression coming. And what he might be right about is what's going to go on in China. And, the opportunities that in China, if the globalists, this is the globalist view, expansion, reset. That's what this is telling us. I saw this. I just looked at it and went, wow. This is what the Great Reset looks like. And it won't matter, like I said, won't matter who's in office of presidency in the United States or not. It really isn't going to matter. But this chart is telling us that story. I've seen this stuff before, folks, and I just like, wow, could that really happen? It was interesting going back to 2003 and moving into the 2009 highs. I actually 3.5 years ahead of time projected within $10 of where the actual high ended up to be in, right before the Great Crisis in 2007. And, so I'm going to spend some time on this. It's interesting, certainly makes for an interesting conversation. But if there has to be something to cause this to happen, so that starts to go to, there's going to be a pumping of assets and all that. And all of us sitting here watching, 500 of us or so, are having the opportunity to actually ponder this and try to figure out how we're going to participate in this type of activity. So, but these are very big numbers, to say the least. Yeah. So, Uncle Brian L has the Rona. Oh no. Okay. All right. So give me a second. Let me get some paper here, and we'll open up to some individual stocks, and I'll just tell you up front, don't ask for Tesla. I'll do Tesla, Apple. They're on the list just to start. So let's do it. Yeah, and probably a commodity bull market is in play as well. Absolutely. Absolutely, folks. Let's go for some stocks. Give me a list. And while you're doing that, I'm going to go off screen and I will collect all these, and I'll come back on here in just a minute. So we'll take about a 3-minute break to get all this stuff together. Okay, I'm back. Let's see the market fade off the highs a little bit. I think we printed almost a perfect R1 today. Yeah, Andrew, I think you're right, man. I think we're all going to be riding on our way to Mars. Okay, all right. Bear with me. I just got a couple more to write down. All right, so let's go ahead and start off with Tesla, and then I'll do Apple, then I'll hit the list. Let me get rid of some of this stuff here so we can see it a little clearer. I'll get this right. There we go. So this is what I was talking about, by the way, on that volatility, like when we were looking at Bitcoin a few minutes ago. This is that volatility where we get and it contracts and then it makes the next move up. We did get an RXT sell. This is weekly on Tesla. We did get an RXT sell on Friday. So we did print up a little bit here, but not a lot. Let's look at what R1 on Tesla was 606. The high 607, so it hit R1. S1 is, S2 is 542. And that is on our market grid service. So if you have that, you already knew these numbers. And so that's, and we're printing a little lower. And like I said before, typically after an RXT sell signal, regardless of the increment, so in this case weekly, we got the RXT sell last Friday. You should go to at least an S2. It's done that. Did it today, actually. And now it's bounced off of that range, but we basically have probably 1 or 2 more weeks. But we may have also set up another one of these volatility. Well, I call them the dragon head, and this is possibly going to set up another one here. Let me pull this over. It's going to set up another high level pattern like this, and I never know, because sometimes I saw a story that was talking about Elon Musk was saying that we better get our costs under control or the stock's going to go down a lot. So I thought that was an interesting comment to make. But this pattern is setting up here. So the broad range, if you look at these numbers here, is the really broad range is 671 to 500, 499.76. S2 R1 so far, this is a weekly. I don't know what happens. We go to monthly here, but let's do it. Yeah, so monthly is even got a bigger pattern set up. So yeah, so Tesla is, I proclaimed at least a high for a while. This was about a 3-month high. We got an RXT sell on the monthly on Tesla back on 8/31. We spent 1-2 months sideways. We also traded, the low was 79, 379. we got to S1 was 386. So we traded between S1, S2, and now as we look at this monthly, this thing is going to enter into this monster range, and it's already printed almost it's printed an S1 just about 604, and then S1 R1. S1 is 530. We're just above that, so this month will be interesting, but most likely we're going to set up this giant dragon head here, and we're going to go into a 3-5 month or more very large, very volatile correctional phase or sideways pattern up here. So this, you also see this is the beginnings of it on a weekly, where we get the RXT sell. Now we're down. We should get at least 1 to 2 more weeks, but we also have set up one of these dragon head volatility ranges. And so it will, in the last time we had this, about 10, 12 weeks in this pattern before we started to go out. So same kind of thing. We're looking at probably 3 months. We're looking at February, end of February, March. Maybe it could happen sooner, but we're going to go into this range. So probably some classic, vertical spreads, some things like that. If you can find these right spreads and right time to even leg them on, where you don't put them on outright, or play either side with some options, might be a way to do this. But I think we're definitely going to be in this trading market. And we go down to the daily. You can see that the daily is setting up. We're right on the 10-day moving average. So 543.21, low 541.21, almost. It just traded just a touch below the 10-period moving average. The 10-period moving average is up 2.37, less than a 10% probability for the market to close under the 10-period moving average today. So that's going to move back into the grid, probably looking at, an R1 592. So there's probably on a short-term basis, there's some trades. There's going to be a lot of good trading. This is going to become a great trading stock as we go forward. So So let's go to Apple real quick, and I'm just going to try to get through these things. Apple, this was probably the easiest trade for many years, which is when Apple did their split to take the other side of the split and all the hype out on the internet. We traded down in. This was a really nice short trade that happened. There's a video on the channel on on shorting Apple on that day, actually the next day after the RXT sell. So if you go ahead and just look at this pattern, we're in this broad range. There's not a lot you're going to garner from looking at the daily, but when we go to weekly, here's that volatility dragon head that I was talking about, and it's a big one. Now we've went through enough of this. We're now potentially getting an RXT sell weekly on Apple. So if we close above it's going to be 122 level. We're 120. If we close above that on Friday, I realize it's Wednesday, but if we close above that on Friday, then you're probably going to get 1 to 2 weeks. You're going to come back into the pattern again, and it will be a continuation of this thing. We should see a further contraction of the volatility in Apple on a weekly basis, and that should set everything up. So let's go to monthly. Might as well do that. Both of these are heavily followed stocks. Here's I'm going to pull this over a little bit. There's a couple of things that I've set up here. I've got the Fibonacci grid here from the high-low from that big outside bar that we had, which was so now we're into just kind of working this grid, but this is that dragon head volatility, and we got down to low 107.32. S1 was 102 on this monthly. And so on the upside here, you're probably looking at capping this thing out 130. R1's 124. We're basically traded there. So we could see maybe a little higher into 130, 136. But this same type of pattern that I've talked about in Tesla is the same trading setup. When we start to look at the monthly, there's going to be a lot of really good trades. And so this is something to go. So let's go to some other stocks here. And I'll start off with daily and go up. Okay. We'll start with BABA. This thing is, this is daily, down 0.98. Not sure what to make of that. These are pretty strange. This must, strange pattern from this standpoint, but we have PPMs are down pretty heavy, especially PPM2, minus 0.86. So that's something to pay attention to. But we're going to need to go to weekly to even figure out this thing. So weekly, big volatility, bottom side volatility spike. So you look for this thing to trade between, worst case, the 242, we'll call it 243 to the 275 level for the most part. Could trade up toward the 287. Just trade within the ranges here of the moving averages that are set up here. And this, I suspect this is weekly. This weekly grid will start to tighten up and start to do that volatility squeeze, and then we'll be at a place to go. Yeah, it's going to be interesting. I think the trade war has made it, but, pretty sure the trade war could be ending. All right. Just going through some more stocks here, folks. So PLTR Tech. Not a lot, this fairly new stock, but we already have set up this volatility. So we're going to see a trading range. We're down at the lower end of the trading range, probably a trade out of here, move up toward at least R1, which is going to be 27, 28 bucks on the upside, trading 22. But we're going to just set up this range. This grid is going to set up a dragon formation. So these are probably the extremes on the downside that you're seeing. There's just not a lot there. We can't even calculate the PPMs on here, so there's not a lot I can get off of that stock. Need more. I actually could bring up our platform. I can do a little better analysis on that. Yeah. So let's go ahead and do this. I'm going to bring something else up here, folks. I love my Warren Buffett portfolio. So we're going to bring up the Buffett. We'll look at BA. Buffett portfolio is up 100% this year. Those of you who watch the channel know we took our software, we put in 9 stocks and said trade them up. We got out for a while. We traded them right into 6. You see where this flat spot was. turning back on, and we've been trading. This is about the highest equity that we've had this year on this. We can look at the annual numbers down below. It started in March. Actually, April is where this thing started, and then just kind of cranked from there. So I did a video on the channel that said, take advantage of Buffett's mistake. All the Buffett lovers came out and trolled me, and I was right, and Warren was wrong. And so now let's just take a look at the open positions, and we're going to go look at BA. But I want to look at some of these airlines. All these trades came back on 11/10, 11/6. This is when our models bought back into these stocks. So BA, we actually bought in at 156. It's at 213. And I'm telling you guys, for $100 a month, you can have this thing. You can make a ton of money with our software. So support the channel. Haven't seen many super chats today, and that's cool. I'd rather you sign up for the software and use that and have the opportunity to make money than just give me money for talking. But the bottom line is these stocks have all moved pretty good. You can see the percent profit. Not a lot, but these are beginning phases. And, you know, we're already seeing a lot of these folks. I think what's going to happen with the the whole vaccine thing is if you want to travel, you're going to have a chip and probably have to show that you've got a vaccine. And yeah, so let's go ahead and go to live. Yeah, so 224. Yeah, so that what you're seeing on our software is yesterday's close. So now as we look at this, we are about to get an RXT sell signal on Boeing, but we finally, this was something I talked about for a while. We got through this 200-day moving average. Everything's turned up. The 10-day moving average, which right where this trade came from, right where this bounce came from, 212.09, 210.30. We traded right down there, and then this thing just bounced from here. And probably whoever said, Andrew, thanks, you didn't need to do that, man. Just sign up for the software, man. But, you know, the bottom line is that this, all of the airlines are going to end up doing very well because from where they are, not that airline travel is going to be like it is, but they've scaled everything down. Everything's so leaned out that at least the perception for a while there's going to be some good trades there as well. Yeah, so anyway, yeah, so let's go to weekly. We're trading at 224, 222 R1, 228 is R2 weekly. So there's definitely some more. RXT is 241. So there's quite a bit potential upside, but I think we're showing signs that if we do get that RXT sell today, then we may see it backfill just a little bit here. PPMs look awesome here on weekly on BA for sure. Okay. I'm going to go back to this airlines portfolio. That thing's up 36, but let's take a look at, I'm not sure what any of these look like. Yeah. Yeah, so anyway, let's go back and let's go to monthly on this since I've spent so much time. You know, Boeing also had some good news. They've got the 737 Maxes. I'm not sure I want to fly on one though. But anyway, it's interesting because on a monthly basis, last month we did get a RXT sell on Boeing, and so far this is actually monthly. So we are likely to see this. What this is setting up, that the moving average 261, which is the 21-month moving average, that's going to be the upper end. So we're getting pretty close. There's still some upside on this thing. And then on the downside, we're looking S1, S2, 198, 185. So you're definitely going to see some volatility here as we go through the month of December. This typically is a big travel month, right? Not sure that's going to be the case. Although I did have a friend of mine traveling a week ago or so and said planes he were on were completely full. So, yeah, that's a good question, David. What's a good leverage bet on China? Not sure. I'm going to make a note to myself. Yeah, that's probably right. Floyd's Garage. I'm sure that's what they are doing. Okay, so what time are we getting to be? 1:40. So I got monthly up on Shopify. Kind of a weird dragon head thing going down. But this is monthly. But huge volatility, still upside on this thing. Minimum R1 1149. High has been 1087, so still more upside on this one. Potential R2 1215. Let's go to see if we can pull some patterns out of here. So yeah, so this is pretty typical volatility range. The 10-week moving average is going to be key here as far as that goes. We're looking at 1020 on the downside is going to be major support, 1035 low today. All right. I don't really see a lot here as we just look at the grid. We're just looking at, the highs 94, R2's 87 is a weekly grid. Let's go to daily because there's really nothing here to play off of. Yeah, so interesting. 2 days ago, RXT sell on the 30th. And then we got basically 2 days down. We did print down to just about to the 1036.01. S3 1035, that probably satisfied that RXT sell. So it's, yeah, this thing's pretty much done. But what we're going to see is it go into a range like where my cursor is right here, right now, and over in this range here, we're probably going to print up into a sideways, slight upward sloping to satisfy some of those numbers I was looking at just a minute ago. Yeah, give me some marijuana stocks. I'll take a look at them. Yeah, we'll do Amazon while you guys are coming up with those. Yeah, so look at Amazon, flat market, nothing there, stable, got to go weekly. Weekly's got that volatility. Start off with like this dragon head, and it's like it's a multiple-headed monster. It's just it's going to continue to contract. We got PPMs still positive on the 10, which is going to supply the support at 31.86. On 31.64 is the 21, but it's actually fading. You can see PPM2 is just diving here. And so most likely look at toward the bottom end of the grid. The ranges should be like, this is weekly. So we should see the high so far, 32.48. So basically R1, we've probably we could see an S2 on this thing, but it's really not very likely. I mean, I think we already printed the lows for the week, and we're probably just going to grind this thing out on the daily. It was just suggesting we'd be in a very tight range. Yeah, so the dragon head is really, somebody's asking that question. What it does is it sets up a volatility and a high level consolidation. They also can have inverse, where it's an expansion of volatility, and the volatility has to be bled off before the markets will make the next move. Typically, when we get the big spike, and like what we saw here, we saw a 3-day surge, and then volatility blows up, the ranges, expected ranges go up, and then usually what that means is it's got to contract before it can make the next move to the upside. And yeah, so anyway, yes, let's do, what time we got here? 45. Facebook, same kind of scenario. We just got this high level volatility. We're trading up at R3 or close to it, high 91. R3, it's almost exact hit. 91.78 was the high so far this week. 91.68 is R3. The RXT is 295. It could continue here. PPMs are trying to turn up. Chances are, if we stay in the upper end, if we can close over an R2 number, 86 this week, that would be probably turn the grid back up. If we go to short term, we got an RXT sell yesterday. We did spike up a little bit. So that, I probably should have started off with the short term, but sideways for a couple of days and then possibly a resumption to the upside. But most of the range looks like it could be already played out on this stock for this week. As far as further advances go or trends go, they're basically positive. There's still an uptrend, but we've seen this spike going all the way back to the RXT sell on 828 on a weekly. We saw it decline out of there. We got another RXT sell, went down to STX below it. That satisfies the RXT sell. Anytime you hit that, then we get an RXT sell again, 2 or 3 weeks down, and now we're still in that range. And what's driving this market right now is the upward sloping moving averages. And you got PPM 1.19, PPM 2.75, and those numbers are 274. We had a low of 71 today, so the opportunity was to buy against or take. That was what I call a value trade below the demand line with the 10-week moving average at 274, and we were able to buy it at 271. That would have been a good trade, obviously. But those are the kind of things you have to watch for. But this thing's already played out in the rally that we've seen today. All right, we got 48. We're going to do one more stock. And then we'll go and watch the level 2 trade into the close. NEO is about as good as any to look at. This is the weekly NEO. And you can see we got RXT sell way back on 710 in NEO. We got one that typically when you hit an STX or lower on the next bar, that satisfies that sell signal. The low was 1046, STX was 1194, so we went below it. And then we went sideways Got another RXT, got one of the little mini dragon heads, contracted, and now we're getting, literally getting these gapping, these surging patterns. And now the momentum has got so high by the time we got to this RXT, there really hasn't been any good trade off of there. And sometimes, and this is a weekly chart, so this is got a lot of momentum here. And so what we're looking at is that this is now going to go and form up that giant, I'll have to come up with some names. You guys need to help me with some names on, what do I call it? There's like maybe it's like Baby Yoda and Yoda, but it's like the giant, this is, when they get to these big numbers, these are like a giant dragon head sets up, and that volatility sets up. And what it does is it actually really gives you an opportunity to trade this market, especially when they form on a weekly basis. There's some big trades you can do, and a lot of times straddles on options, and those are some of the best things to look at. So yeah, they're bouncing around as we come into the close. They're trying to print the S&P up. We went all the way down on NEO on a daily, almost to the 40, but we bounced, and you see these upward slope of these moving averages. This is a big reversal. This grid tomorrow, when it updates, market closes, will actually turn up. So you can look to R2, I think maybe R2 number, and I'm gonna bring something up on the other screen here. Yeah, so R2 would be somewhere around. It'll go up. It'll be closer to like 49 to 53, and this thing turns up tomorrow on NEO. Yeah, so I'm bringing up the Portfolio Expert. This is a market grid on Portfolio Expert. I'm working on getting some quotes here off of these. I'm looking at a widget just so we can see the actual price, so you don't have to go and look. We can see this is the daily, weekly, and monthly numbers on NEO right there. And you know, you can use this to trade off of, and this is all of this area here is what I call the matrix, and this is the daily grid, the weekly grid, and monthly, and then the overall, all three of them together are basically the matrix that you can use to find key support and support resistance numbers, and that's what I'm talking about on the channel here all the time. All right, we got about 8 minutes to go here. Gonna flop over to the futures. I got a little bit of a spike there, a little volatility spike, and I've discussed this before. This is the same. This is market grid. This also has what I call the webs. The WaveTech webs, and they help also to not only to define resistance, but more importantly, trending and trending patterns. And so we went from this little spike in volatility where we traded up. Now we're seeing a little bit of selling. We're back at 64. It looks like this is going to set up to be maybe an interesting close today. Hey Keith, thanks for joining, man. That's really cool. Yeah, I had it's sort of I had a great idea about 4 years ago, and the idea was that I set up a Twitter account. We have this. I can send emails and notifications out of TradeStation, and we were having it send an email, take that email, package it, and send it to a Twitter account and give alerts when values were hit. And I may try to reopen that package. It was a closed circuit. You had to have a password to get into that Twitter account. So maybe there's something there. I saw somebody said they got they missed a Neo trade. All right, so yeah, we're just going to watch this. What do we got? 5 minutes to go. We'll just continue to watch some of this stuff. Yeah, I set up a Discord account, and every time I just hate Discord for some reason. It doesn't. I would love to have ability to do some of the stuff that Discord is doing. Am I just not happy with it? I've got a Discord server, and it may be just me trying to get used to using it. I know a lot of gamers use it, and it would be fun. But yeah, so what we'll do is there's a couple things. We're gonna just kind of watch this thing trade into the close here for a few minutes, and then come back. I'll cover a couple stocks, and then we'll call it. And yeah, you're welcome, John. That's funny that you work for Apple and you guys are using Slack. Didn't Microsoft buy those guys? Yeah, yeah. We've looked at that as well. I've got a buddy who owns a small software company, and they use that a lot. I think it's Arga Guerra. Yeah, send us an email. We'll reach out to you. info@kendallreport.com. So let's take a look. We're down to the final 2 minutes. This is my game time here. I really like to watch this thing trade here. So we're trading just a few handles off the high of the day. Seems to be a bid coming in. And what we want to watch for in the last 2 minutes of trade, how it trades, we're going to trade up and see if there's any short covering, if there's additional buying coming out. We did have an RXT sell. We did trade S2. I talked about that early in the show. So kind of a minimum satisfaction on that S2 trade. Here we go. We're trying to print up and the 68. We're $1.75 off the highs. So we're trying to get back to this little spike print that we got about 5-6 minutes ago, 10 minutes ago. So we're printing up, and we'll see how this thing how this thing plays out here. Yeah, Jeffrey Harden, that's probably what's going on, is just a little distribution. That's always the age-old issue, is it under distribution? Okay, there was the close. We printed up to 875. 975 has been the high. Let's go over and take a look at a couple things here. Yeah, NEO went out right at it at its high here, it looks like. Let's take a look at the market grid, see how this thing played out. So we go out at the highs of the day, close up just slightly on the session. Yeah, so market grid shows that the R1 number 3671 pretty much just smash on. R1 3671.75, the actual high 3671.50, low 3642.25, and R2 on the futures, we traded between S1 R2, and I believe that print occurred overnight. So we did trade R2 basically between R1, R2 and S1, S2 on the downside, R1 on the upside. All right, let's do a couple stocks here, and we'll see how these things set up. Okay. Yeah, Riga, just if you want to just, yeah, send an email. We can reach out to you. No problem. All right, I'm getting some stocks here. All right, let's take a look at a couple of these. I'm going to do just a couple. As you folks know, it's In and Out Wednesday, heading for burger time. Thanks, Lori. So we'll do rig. Yeah, so on a daily basis, rig's got that dragon head setting up. Momentum's really strong on this thing. And let's go to weekly, because I think that might be a better place to look here. Yeah, so weekly did get RXT sell last week, that explosion out of that low volatility. But this is what I've been talking about today as we went through the channel and chatting live. As we get this little dragon head, which is a volatility kick, and then we consolidate. Typically, if it narrows down really small, you'll get a leg down. Then we got even the second leg down. Then we broke out to the upside. But we also had PPM signaling that we're going to break out to the upside. And I'm sure if I put a trading model on here that we will probably see that as well. Yeah, so the trading model actually stepped into this thing on a breakout at 140, 5. So yeah, so that did step into that. I thought it might step in a little better than that. But yeah, so this is a weekly. If we go to daily, we probably pick it up. Let's go to there again. Yeah, so if we did the same thing. If you had on a short-term model, let me just put this out. Let's put rig over in WaveTech, just see what that looks like on a daily. Yeah, so rig. Yeah, rig got a buy signal on the dailies. I know it's an 85-cent stock, but it's been hammered to nothing. So it got a buy at 85 on 11.4. Now 202, up 137. The note from our quant software is it's an upward, extreme upward acceleration, suggests a spike reversal top could occur at any time. I think it already did. This message is it's probably been in this phase 3 for at least probably 5 or 6 days. So this was the spike it's talking about. There's still strong moves under here. So PPMs, you can see them on the screen here. They're also, let me move that down. That's not going to work. Anyway, you can see that this thing is in a pretty strong pattern, and there it is on your daily models right there. So we're seeing the futures. I kind of took my eyeball off of there, but we're going to flash back for just a minute. We saw the futures print into new highs after the close, which is a positive sign, but we're setting up a little mini dragon here. But we definitely printed up to 71. And what did I forget what I said the RXT number was here. Let me put it up. I just curious. Yeah, so 71.75. So yeah, 71.50. So that's the same number. I thought there was a new number there. All right, let's do one more. I've got IWM. Kind of goes into some of the stuff that I've been talking about. It. I covered the Russell earlier, so on the replay, make sure that that you see that. Yeah, CGX. That's the marijuana stock, right? We'll do that. I'll end on that one. How's that? But yeah, so you got on IWM, just like with the Russell, obviously similar constituent list. You got RXT, you're in this sideways. We did manage to print up a little bit today. Overall, this trend is up. 10-day moving average at 181 is your key. Longer term basis, 174. Probably, if I were holding this from down in this lower level, that's where I would own that. And if we put same thing, we put IWM over here in WaveTech on a daily. You'll see we'll see where we own it from. So it's long just on the 11th at 173. And that's probably about where this thing should be done. I'm going to flop this to a 3-2 just to see what that did. Yeah, so 3-2 had the better buy. 3-2 went in at 11.4, 157. It's 182 up 15%. But we're looking at what the logic is telling us. It's in a very strong move. that an intermediate top can occur during this period, and that's basically what we're seeing as we go back over to the chart. I was talking about where we're going to have this, not a soft roll, but just basically it's going to climb the wall of worry. It's going to climb that 10-day moving average, and then it will go from there. So I think that's going to do it for today. I really appreciate everybody taking the time to spend 2 hours and 29 minutes hanging around and talking markets. I know, CGX, right? Is that not the right symbol? CGX. Yeah, I don't know. That's the wrong symbol, it looks like. Anyway, all right, we're finishing on ACB. We're looking at, here it is, Aurora. That's what I was looking for. Yeah, a couple, this is the daily, and of course, I don't know. Yeah, that's the other thing, you know, marijuana is going to be legalized. We passed it here in Arizona. Didn't figure out why it didn't do it last time, but it is done. And a lot of states and federal, I guess with, says Kamala's a pot smoker, she said. I guess she's going to legalize it. So anyway, yeah, we'll see what happens here. This is trading above the 200-day moving average. I think the weekly will give us maybe if there's more to this pop than it meets the eye. Yeah, you got some great PPMs here on PPM 1, 2, and 3. They're all accelerating. If I bring up the logic, ACB, let me see if we have that in the WaveTech system here. We do. Good. Yeah, so this thing's been long since $4.50 on 1020 was the buy. These crazy spikes that we saw up to 14. We were just looking at the other chart. It doesn't have a great track record, but boy, if you're playing that coming into the election mode, that was certainly the trade, right? So the PPMs are all pretty good, but we're looking at an extreme here, as I mentioned on one of the other stocks we looked at. We're looking at the spike reversal. Well, we've had two of those in this pattern. And like I said, this message is probably trend phase message has been on the screen for a while. We don't actually put it up there when it first comes up, but that has certainly been on there for a while, I suspect. Yeah, you're right, Ram. That's exactly right. That's the game, right? Is make it legal and tax it. So yeah, I'm just trying. I'm going to try this one last time, but. Yeah, I guess that CGX is a penny stock or something. I can't bring that up. All right, guys, I'm going to call it quits. It's been a long day. I got a couple things I've got to do yet this afternoon. So thanks for hanging out again. Really appreciate it. I'll have a video out for you tonight. And we're looking at 3670 on the S&P as we close out the show. So thanks again for watching.